All right. Today we're going to do weekly chart technical analysis, and we will review all of the indices and try to get an idea of where we're likely going to finish out Q4. So first, looking at this weekly chart of SPY, you can see where I had the projection that I thought we would likely come down towards 430. And then from 430, if we found support and started to bounce, I think there's a good chance we start heading higher towards 480, which would likely be sometime early next year. The price target we would probably land at this year would probably be somewhere around 460 to 470. Now, this does require that price action holds this very important support trend line. And as you can now see on the weekly chart, we also are starting to develop a short-term downtrend because the weekly chart has this lower high that broke down into a lower low. Now, this is usually when you are going to get the most polarized viewpoints of the market because you can make a very valid case that this is now starting to be a downtrend, but the bulls still have the advantage of this being a weekly uptrend until we lose this support trend line. So now keep in mind, there's nothing special about any arrows or lines drawn on a chart. You need to always manage risk from very critical levels. So today I'm not going to just tell you we're definitely going higher, we're definitely going lower. More importantly, I want you to understand where to manage your risk from and understand the general direction of the trend and how you know if that general direction of the trend is shifting. So the best way, in my opinion, to look for that on SPY is draw out this trend line of support. And as we get down near that support, that is not where you want to be trying to short the market because that is where the market is likely going to bounce. And if anything, that is where you should be looking to take low risk long trades. So that support trend line this week happened to be right around SPY 422, and that's exactly where the low of the week was, and then we bounced and closed above 427. So going into next week, that's going to continue to move because that is a trend line that has a positive slope, so time is important when you look at the price of the support. So next week, that support is going to be a couple dollars higher, and that support is going to continue to rise as we go into October. So even though we broke down through 430, that's because we got there faster than I expected, and I did mention if we got there faster than I expected, we would need to hold that support trend line, and so far that's exactly what we've done. Now, if you are one of those people that hate catching a falling knife and you don't like the low risk entries, then you are simply waiting for a trend reversal from this weekly lower high into the lower low, which means you are going to need to break this red trend line and start to see price action making higher highs and higher lows. Now, the only tricky part about doing that is you could be ignoring the larger degree trend. And if we get a very strong rally, it's not going to be easy to find an entry. But again, that's something you need to decide and what's best for you and then put that into your trade plan. So in my opinion, the support trend line is the most important level to pay attention to. And if we break below that, there is going to be a very good chance that we could go all the way back down towards 400. And that would obviously be a much more bearish scenario because that would be a very powerful downtrend that is likely going to take us to much lower prices. So this support zone between the support trend line and this level at 430 on SPY is very critical. So the bulls really need to get price action back above 430 and then continue to push higher and break out of this downtrend to confirm that we're going to my projection at 480. If we bounce to a lower high and then slice through the support trend line, that is where we are likely going to get very high volume panic selling. And that's why I'm telling you, if we break down below this support, there's a good chance we're going down towards 400. So the bearish scenario is very clear and it requires a break of this trend line. And the bullish scenario is technically still valid while SPY is above 420. So you can catch the falling knife knowing this is a bull trend. The only time you need to be very careful catching a falling knife is a year like last year, where we were very clearly in a very powerful bear market, and trying to catch that falling knife as a short-term trader would have destroyed your trading account. Only should an investor continue to accumulate during a bear market. Short-term traders, you need to understand the direction of the strongest trend and then trade in that direction. And right now that could be difficult because you could be viewing this as a downtrend or an uptrend. Either is very valid, and yes, you can short or go long as long as you're managing your risk. It doesn't matter. I would just caution you against trying to short near support. And then if you're a bull, be very careful if we bounce towards resistance, which is going to be that zone between 436 and about 444. So we have very critical resistance. The bulls need to break if we start to bounce from this support, and the bears simply need to maintain this newfound downtrend of the weekly lower high and lower low to continue to push down through support. And then the bears should have an easy path lower towards 400. I still favor the bullish scenario, but I'm giving you both so that you can plan for both. And then the price action will guide you on which one is correct. So make sure you don't have a bias. Even though you can have an opinion on where the market is going, you really need to let the price action do all the talking so that you don't miss the next leg in this market. Because whether it's down or up, as traders, we couldn't care less. We simply want to be on the right side of the trade. So know those very critical levels, draw them on your chart, put them in your trade plan, and know exactly what you're going to do whether we break down through support or continue this bull trend into higher highs to finish out the year. And then let the price action do all the talking and trade according to what the price action tells you to do. So then jumping over to the weekly chart of the triple Qs, you can see it is the same exact story as SPY. We're sitting at the support trend line on the weekly chart. We bounced off of it intra-week and we still have the lower high, lower low rejection, which could be warning us that if we break down, we're going to much lower prices. So in the triple Qs, I think that critical level is down here right around 350. And if we break down below 350, it looks like a straight line flush to 330, which is the only place we are going to find support below 350. As you can see, the triple Qs went up parabolically and they sliced right through 330 and never looked back, which means there is no support below 350. If we break 350, it is going to be a very powerful flush to 330. That's what the weekly chart is telling us, so don't ignore price action if we break through that critical support. Now, at the same time, do not assume support is going to break. Wait until it actually breaks and get confirmation. That way you don't short in the absolute bottom of a correction and then get your face ripped off if we bounce from here and break out. So obviously there is the potential of a face ripper from here, and that face ripper could take us from this support at 350 all the way to the previous all-time high in the 400s. So the very critical level to pay attention to right here is 350. And if we break 350, it is a risk-off market, which means you can short below 350 all the way down to 330. But as long as we are above 350, I would stay optimistic that this could still be a very powerful bull trend trying to push to the previous all-time highs. Moving over to the Dow Jones, things look a lot worse in the Dow, so this could be a leading indicator that we are going to break down in all of the indices. However, I prefer to follow SPY and the triple Qs because they are really the ones with the big top 10 companies moving this market right now. And it's no surprise that market breadth has been washed out, so the Dow Jones and the small caps are looking a lot worse. So in the Dow Jones, we had this inverse head and shoulders that meant we had to stay above the neckline at 342. And as you can see, we did not hold above that support, and we did get the lower high into the lower low rejection. So in the Dow, there's really no reason to be bullish until we can break out of this resistance trend line, which is going to require a break back over 342 and then see some kind of trend reversal of higher lows and higher highs. So in the Dow, it is possible below the 342 neckline that we are going down towards this 328 support. And then at 328, there is a lot of support there. So I would expect to see that level holding as support. And then maybe from there, we would get a bounce into the resistance trend line. And then if we were going to continue into a bearish scenario, we would get rejected from there and then continue lower. And then we would just continue to form lower highs and lower lows. But in a more bullish scenario, we need to break out of here and then show an impulse higher to push to higher prices. So in the Dow Jones, the critical line in the sand is at 342 level, which we're still below. And then below that, there is the chance we are trending down towards 328. Or we simply need to break back over 342 to confirm this was just a quick drop below support to grab some liquidity before going higher. So for now, we are going to eliminate the line that draws to 370 because we did not hold above 342. So we are looking for the potential of a path lower below 342 or an immediate bounce to reclaim 342. So yes, the Dow Jones is looking very weak, which could be an early warning sign. And then finally, looking at the Russell 2000 IWM ETF weekly chart, we could see a very clear support trend line that we're heading into, which is going to be down here right around 174. And then we have the resistance trend line from the lower high, lower low breakdown ever since we broke down below 183. So below 183 is a bear trend, but we are sitting right above this support trend line right around 174. And if we break below all of this support down here at 170, this is going to look like a double top breaking below the neckline, which is obviously incredibly bearish. So it's really bounce or die for the small caps from 170. And if they don't bounce from 170, this double top confirms and we're likely going for a full measured move lower. So if you want to catch a falling knife in the small caps, that's going to be between 170 and 174. Or if you want to get bullish, wait for a break back over resistance at 183. Bears want to short near resistance, and right now we're very close to support, so wait for either a break of support or a bounce closer to resistance. Okay, really quickly jumping back over to SPY, let's throw on the indicators and we can see the weekly RSI is starting to break down below 50 and we are getting very close to the lower Bollinger Band on the weekly chart, and there is this volume shelf where there was this air gap on the breakdown below 436 that could take us to the next volume shelf right around 415. So it is looking more and more likely that we could break down, but that is going to require SPY to lose that support, which I just went over. So on a break of that support, that is going to be bearish indication that we're going to lower prices. And the next likelihood would be that lower Bollinger Band and that volume shelf right around 414 to 416. So pay attention to the indicators because they are showing a lot more downward momentum. but we are sitting at support, so we need to bounce immediately or the bears are going to take over this market. The weekly Bollinger Bands are starting to squeeze, which you're seeing on the squeeze indicator, and the MACD, while it's still above zero, is still crossed over and heading lower as that histogram is picking up momentum. So just keep all of this in mind. This is becoming very risky if we lose support, and the bears will take over if we lose the weekly support levels on the charts. So go draw up those trade plans, know these critical levels, and be prepared for any scenario. Do not assume the bull scenario has to win or the bear scenario has to win. Simply prepare for both of them and then act according to what the price action tells you to do. Don't forget to take advantage of the BANC Labor Day sale, which will be expiring in October. So this is your last chance to claim the discount. And if you're an existing BANC member, don't forget to take advantage of that annual plan where you can still save an additional 10% off the annual plan by applying the coupon code. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.